Leading the discussion on cashless future, the digital wallet race is heating up, is Nikolai Isayev, Chief Operating Officer and Editor-in-Chief at Finance Feeds, joined by an exciting lineup of industry professionals. Let's give them a warm round of applause.
Thank you, Canny. Welcome to another exciting panel here at IFX Expo Asia, Day 2. We're going to be talking about the cashless future and how the digital wallet race is heating up. Today, I'm joined by Daniel So, who's Head of Business Development in Hong Kong at WorldPay. Daniel, thanks for joining us. Paul Van Sinfeit, who is Head of Cross-Currency Solutions APAC for JP Morgan. Paul, thanks for joining us. And Anish Jain, who is founder and group CEO at, I think it's Winity Life and WadsPay. Anish, thanks for joining us. I know you're very busy. Guys, I wanted to start off by giving kind of an all-play question. I wanted to ask each one of you, how do you see Hong Kong's position in the global wallet race, and what makes it unique, and where does it lag?
Maybe I start first.
Sure.
So I think Hong Kong being a financial hub and also international financial hub in the world. So I think it is quite important that have a strong demand from Westerners as well as from the mainland China. So you can see that in Hong Kong, most of the merchants has equipped different kinds of payment method, such as credit cards of Visa, MasterCard, Amex, and for the digital wallet, can support on Alipay and WeChat Pay, or even local APM of PayMe. So I think Hong Kong market is quite unique that have different kinds of payment method to respond to the market demand.
Great. Guys?
I mean, mostly if you look at what Daniel said, I think the Hong Kong has a unique experience because it has very much the Eastern influence and the Western influence. Mm-hmm. Every time I go to the States, and I go, unfortunately, too often, most people don't even know QR codes. And I think that's really unique if you look from Hong Kong perspective, that they have the experience of WeChat Pay, Alipay, how to manage those ecosystems, and really grafting out across the globe. Because if you look at US firms, they still don't really understand how to do it from a wallet perspective. Mm-hmm. Every time I talk to my colleagues, they all say PayPal is a wallet, which is not really true. And if you really look at the statistics, the biggest wallet in the US is the Starbucks card. And that's the biggest one that everyone uses, but the rest they don't use still. And I still think we're still having discussions at the firm about checks in the US. So it's very much, I think, the experience over the years to really understand both sides.
Anish?
So I think Hong Kong, just because of the proximity it has in the region, it has always been the center of trade for Asia, right, where East connects with the West. The region has been experiencing phenomenal growth in payment acceptance, in innovative payment ecosystems, may it be QR codes, may it be mobile-based payments, wallet-based payments. So that, and Hong Kong, the regulatory landscape has also been very, very comforting to companies which are growing. So that's what positions Hong Kong in a really, really good place.
I think both of you make really good points in the sense that it's a crossroad between East and West. And what Paul just said, I always have the impression that the West is always leading, but in this particular topic, it really isn't. Like you said, QR codes and in the US, some things that we're all used to, let's say in Europe or in the East, don't necessarily exist there. And I was going to actually ask you a follow-up question. Do you think that it's also a matter of scale? Right, if we look at Asia, if we look at just the sheer amount of populations, the populations of the countries in the East, right, as compared to, let's say, the U.S., where there's so much demand for going digital, for instant payments. You and I just our phones touch, and that's it. Our transaction's done. Do you think that has an impact as well?
I don't really think it's scale. I think it's more the journey that the Western world and the Eastern world went into, where in the US or even in Europe, people utilize as debit cards. The cost of transactions went down many, many years ago. And if you start looking at, for instance, China with WeChat and Alipay, they came up from nothing to immediately to e-wallets, where in Europe, people already have debit cards there is a lot of acceptance of debit cards, for instance. So creating an e-wallet, creating something on your phone is an extra step compared to already having an efficient system. And I think in the US, it's more cultural thing. Every time I speak to my US colleagues, people don't trust banks. People love the checkbooks because you get a checkbook when you're 18. And it's like, I would like to write a check.
Yeah.
So it's a cultural difference also comes into play. Mm-hmm. And it's a step-by-step to change the culture. Going from zero to e-wallet is much easier than going from an established system, credit card, debit cards, to e-wallet. Because, at the end of the day, even me, I still love to use my credit card just pure from a points perspective.
Sure. Do you actually still carry them around?
I still do to carry them around because I don't trust my phone.
You're old school.
Yes, I'm very old school.
Nice. Daniel, my next question is for you. I think we could all agree that merchants are on the front line of adoption. And I wanted to ask you, what are the key enablers and frictions in getting wallets accepted widely in Hong Kong, since that's kind of your expertise?
Yeah, I think this is a very good question. I think especially during a couple years ago, during the COVID period, that the Hong Kong government rolled out the consumption scheme voucher for the Hong Kong people, citizen. So in order for the citizen to utilize those consumption voucher, the merchant must adopt the digital payment in order to have this kind of business. So during this period, it triggered a lot of demand for the merchant to equip with the digital wallet, such as Alipay, WeChat Pay, Payme, or whatever, so that they can capture this kind of business. So I think this is a very good enabler for the merchant to equip this kind of payment method to respond to the market demand. Yeah. And for Hong Kong, I think take a very real example like riding a bus. Uh-huh. You can pay by different kind of payment method. Pay by coins, pay by Alipay, WeChat Pay, Visa card, MasterCard, or same as riding the subway, the MTR as well. Yep. So I think this is very comprehensive. Great.
Paul, if I throw it over to you, we want to talk a little bit about what you guys are doing over at JP. You're enabling, or you're embedding wallet-like features into treasury and cross-currency solutions, which I think is your expertise. How is this scaling across APAC today, and especially with real-time and cross-border payment demands?
Very good question. I think what we try to do is a lot looking from a treasury flow to become 24/7. But at the same time, a lot of our customers don't really need 24/7. It's only when they do B2C. Because most people do not work on Saturdays and Sundays. So a lot of people talk about, okay, I want to have real-time treasury, I want to have 24/7. But if you look at the demand on Saturdays, Sundays, if it's a B2B business, it's completely that. It's more the optionality you have. The other thing what a lot of people forget, especially when you start looking cross-border, you have the payment landscape and you have the foreign exchange landscape. Foreign exchange is very a 24/5 business, really maximum. And anything that is 24/7 means there needs to be pre-funding due to the fact that the foreign exchange market is not open. So it's also a cost perspective for that. So if you start adding costs towards offering 24/7 and charging customers accordingly, it really needs to show from a benefit standpoint. Now, I think from a consumer standpoint, and especially if you do B2C, you need to be 24/7 because you need to accept 24/7 all the time. But that's the demand, and then also the cost comes into play. So it's a similar thing what we a lot of times bring up now with all the stable coins. We have our company called Cashless who does everything on blockchain 24/7. And I always have to say it's not a stable coin we utilize because otherwise the team will hunt me down. But it's a similar kind of concept. But really comes in is a good point that comes true is people talk about stablecoin, USDT, it's much easier. At the end of the day, the cost of transactions is not that much. It's just that you have a banking provider that can charge you accordingly. And it's the same discussion when we talk about FX rates on credit cards, debit cards. We had a very good discussion last year whereby someone made a comment, the FX market is not very efficient. And if you look at it, FX trading is one of the most efficient markets in the world. But people charge you 2.5%, 3.5% of your credit card for foreign exchange fees because they can. that's really where it comes into play. So it's more about people understanding where the real true cost lies and how they come true. Now, and with that, the pickup itself, consumers are willing to pay for convenience, and that's why 24/7 comes in. And a lot of the clearing systems, and I was in India 2 weeks ago, are looking to make cross-border real-time payments available, utilizing your banking app, other e-wallet apps, and it's pure convenience for the merchant, so no cash, as well as for the individuals itself. But it comes to a cost at the end of the day.
Do you think that we will see those costs continue to decrease over time?
I think the cost has not really been embedded fully back to the consumers, and we'll see where it comes in. So if you look at, and it's a good example, the remittance companies, they pay out 24/7, immediate. They have a pre-funding model. And pre-funding, at the end of the day, you use your own funds or you get a loan. When they start charging back to the consumers, it becomes a complete different kind of conversation.
Absolutely.
So that's, I think, we'll still see. I think there will be an increase of costs, pure because the reduction of capital starting to happen more and more. And then there will be a readjustment to people. Do I really need to send these funds immediately, or do I can wait 1 or 2 days?
Yeah, makes sense. Anish, I wanted to throw it over to you. I would say that fintech wallets are experimenting with blockchain, multi-currency, and stablecoins. I think we kind of touched upon that already here. Where do you think fintechs are out innovating banks, and what kind of hurdles remain to mainstream adoption, do you think?
See, we got to go back to why fintechs exist, right? Because there have been challenges in the inherent payment ecosystems of the traditional payment rails. And the whole idea of fintech existing, or the fintech industry is existing, is to identify those gaps or create new innovative payment ecosystems. So fintechs develop fast, fintechs innovate smart. The challenge remains where these smart innovations get embedded into regulations. Because unfortunately or fortunately, regulations have not kept up with the speed of innovation in the market over the last 20 years.
Absolutely.
If you look at this region has evolved from probably 15% banked to 95% banked today. And that's due to fintechs, that's due to WeChats of the world, that's due to PayNows and PromptPays of the world, which have come, UPI in India. And that's the challenge which continues to remain, right? How do we solve for the last step mile, which is embedding into the banking system, off-ramping, on-ramping? And that's where even some of the smarter solutions have either failed or they've not been adopted that well into the ecosystem, because that's where the cost goes up. And that's one of the challenges which has continued. But we also see a move or a shift, seismic shift over the last 2 to 3 years, where reform has come in. A lot of reform has come in. A lot of new regulations are being introduced. And I think, in a way, in certain markets, we are seeing that the central bank is taking a much more a forward approach with regulations, and which should solve for these issues going forward. But like I said, I mean, fintechs would continue to lead the way, because there is a line where the banks stop, and that's where the fintechs start.
I think you make a very, very important point that fintechs are a lot more flexible. They can bring things to market much quicker than, let's say, a large, maybe international bank. And Paul, I wanted to ask a follow-up question to you, and I see you wanting to comment. Do you agree? I mean, large banking institutions, you've got teams that need to sit down, kind of brainstorm, and there's a whole process that goes on. Whereas, at a company like Anish's, no disrespect to JP, but a company like Anish's, they sit down, they hurdle, they're like, bang, bang, this is what we're going to do, or we already have this built, and we're just going to have to build on top of it. You know what I mean? Do you agree with that, or am I misunderstanding?
I think there's a few things. One, I don't think banks and fintechs really compete.
Okay.
On the retail space, yes. On the corporate space, not really. Pure because also the fact balance sheet comes into play, and we have the power to demand business back.
Okay.
As well as we need both each other. And that's where the point is, like, it's great for all the fintechs, new innovation solutions. At the end, they still need the underlying infrastructure to move money. Till the fintech really becomes a banking license and then becomes like a normal corporation, exactly what everyone else does. Similar what you see before with Google, all the consultants came in and the entire culture changed because it became a corporate. So I think there's one. Now, we have different teams in JP Morgan, and some of them are very much like a fintech. We give them budget, do what you want. But of course, it's still the corporate structure comes through, and it takes delays. But at the same time, there's also a difference. We have $12 billion spent on technology, which no fintech can do. So it's pros and cons. Where it really comes in, I see it more as a collaboration than really competing.
Okay.
Because we both need each other. And that's really, I think, where it comes in. The fintechs drive some innovation. We drive, consistency, regulations, as well as the underlying infrastructure for a lot of these fintechs itself.
Okay. Yep, makes sense. And also capital, right? If we think about large banks, I mean, fintechs need capital to do things, right?
Yeah.
Yep. Anish, did you want to add something?
I completely agree. I mean, that's what we talk about, the stutter step, which doesn't exist between fintechs and the banking system right now, or the capital markets. And if we can solve for that, those handshakes, innovation would become that much more relevant. And it would be available to the masses. So I completely agree. Yeah.
Cool. I've got another kind of a question for all of you. If we kind of expand a little bit more and think more macro in terms of banking, central banks. That have obviously been exploring digital currencies, CBDC. People have been talking about this for years, and also instant payment networks, like Paul mentioned. How might these intersect or compete with, let's say, commercial wallets and private payment ecosystems that exist today? Daniel, if you want.
Yeah. So I think, we can see that there is a trend that the central bank will offer the digital currency, that we are migrating into this direction. And I can see that it's going to be a very intensive competition among these kind of digital wallets, as well as the cash, or as well as the digital currency as well. But from a customer perspective, that digital currency is something that official, so would be very secure, and also should be low cost. But for the other digital wallet, I can see that they would bring in lots of value or benefits for the customer to use it. So this is what I can foresee in the future.
Great. And what about you guys?
It's a very good question. I think with the digital currencies coming in, it's just a next evolution. And let's be honest, we don't move cash anymore anyway. So everything is on the internet for the last 10 years, with exception of like a country before, like Myanmar, where they would literally had to send gold to each other. I think, as Daniel rightly mentioned, it really comes to the experience of the user. And digital currencies is much more a regulated item, saying how are we going to manage this and come back with a standard. The issue we still have, there's no standard across. And a lot of individuals don't understand, but even USDT, if someone goes bankrupt, how are you going to get your money back? And that's really where I think it comes back to the next step, with the regulator stepping in to say, we're going to accept this. This is the standard. If something happens in the ecosystem, we'll be there to give the trust to the system, which is similar like MasterCard, Visa, all the other ones. What is the main item? Is trust.
Okay.
Because otherwise we can just, we make anything a currency and we'll say, okay, we accept that this is the value here.
Yeah.
And you trust that the value is given further. And I think that's really the biggest element when you come in, where you'll see with all crypto, digital currencies, is a trust factor that you can use it accordingly. And that's also the risk. So if one big provider would perhaps have fraud or fail, what's going to happen is the trust is taken out of the system and the entire system could fail accordingly.
Very good point. Anish?
So the way payment works, it's a layered system. At the bottom of the layer is the central bank, right? Or the top of the layer is central bank, which regulates the entire market. Then you have commercial banks, which basically convey the messaging from the central bank, may it be distribution of cash, money, opening accounts, capital markets, whatnot. And then there's the users, distribution and the users. Till 2018, 2019, the central banks didn't want to acknowledge the existing of digital assets. That has changed. And for the first time probably in history, digital assets are now, it's a user demand which has created the central banks to step in and start regulating the markets, because what we thought that decentralization is the way to go of future is probably not. But decentralization with control makes a lot of sense. And that's where the relevance of central bank and them taking a much more active part in managing payments is important. They just can't take the approach that we have done and and let the banks and the users follow. But the user has its own demand. The commercial banks have their own demand, and that's where I think the role of the central bank becomes a lot more important.
Great, great. Anish, the next one's actually for you. We'll kick off with you, but I want to get your guys' perspective as well. We could argue, I think, that wallets risk excluding the elderly and underserved in certain regions, right? What's actually working to close that digital gap? Let's say maybe in the design of fintechs, wallets, let's say some partnerships with local communities, or maybe even regulations that kind of would assist what we would call the elderly and underserved in some regions to, have greater financial adoption. And when we say financial adoption, it's really digital financial adoption.
So this again goes back to the region that we are talking about, because if you look at the Asian regions, China, India, Thailand, Indonesia, they went on a way, and like what Paul was saying earlier, these are countries which have started emerging in the late 90s or early 2000, and their payment ecosystems are already developed in a way which are, they're QR code savvy, they're NFC savvy. The telcos have played a huge role, because probably in the late 90s, the governments thought telcos are going to be the drivers for financial inclusion, but that didn't work out. And then that we had to create the entire fintech segment or the fintech industry to fill that gap with the telcos. So I think that education has been going on for a very long time in this part of the world, at least. If you look at Africa or South America, it has now started over the last 10 to 15 years, has started gaining traction. So there's a lot of learning which could be taken from this part of the world, or the regions that how they have kind of built this, and bring it to other regions which are evolving or soon catching up.
Great. Paul?
It's a very good question. I think it's just not digital wallet, it's the digitalization for the elderly. And you can see it also the fraud cases. When you see it fraud, the main fraud case happen with the elderly, because they're not yet used at the technology standpoint.
Right.
And it's not just wallets, it's insurance, how they deal with with the governments. It will take generations to get there. And it depends a little bit. I mean, Asia has a very young population compared to the US, Japan.
Yeah.
And that's also, you see, if you look at the statistics, digital adoption in Japan is very low. Even to the point that they had to set up a ministry to take off the floppy disk, because the government was still using the floppy disk itself. So for them, it takes a few generations to really move out cash. It's the same, you go to Germany, every German person still has their cash, because that's the way culture comes in. So changing that, as well as then, most people when they're 80 years old don't want to change. That's really what comes into play. So I think it will take a long journey to bring it in. And that comes in that providers have to think about what's their target, as well as if they want to include everyone, to have different propositions. And I think that's the biggest difficulty, to create propositions for individuals who are not digitalized and individuals who are digitalized, and then scale up. It's the same thing where you go to Europe now, you can't even find a bank branch in most countries, because everything is digitalized, and cost cutting, where consolidation happened. Compared, if you look to, for instance, Singapore, it's an overbanked population for 8 million people, too many banks, too many branches. It's still a cultural thing, but that will change. I mean, the first time I moved to, for instance, Singapore, you still have the ATMs, which is like every brand has its own ATM. from Europe, you're just laughing because why would I care where the ATM is as long as there's an ATM? I don't need a brand. But that's, that will change also pure from a cost perspective. Do we really need it? And that will create that entire thing also with the algorithm.
Daniel, what's your perspective from open?
Yes, I think this is a very good question that due to the technology advancement, like I take example in Hong Kong, that when the customer using the Octopus card, right now can be installed in the mobile device. So they can use only tap on the Octopus machine, then can make the payment. So this is something quite user friendly. Yep. Even for the elderly to use it is very easy. So I think the adoption rate in Hong Kong for this kind of digital payment is quite high. Mm-hmm. So thanks for the technology advancement of this, so that this kind of digital wallet can be easily rolled out in Hong Kong.
Mm-hmm. Mm-hmm. Great, awesome. I've got another all-play question for you guys. If we talk about, again, the future, if we talk about things like what I would call them super apps, right, where you've got tons of features and functions, and it's kind of like something can even be a lifestyle app, but then also have a wallet embedded in it, right, and have that kind of functionality. As wallets become sort of invisible layers inside a lot of these super apps that we use, right, we can even think about things like Facebook or Instagram. As wallets become sort of invisible layers in super apps and embedded finance, what new risks do you think we should be thinking about? Like, for example, privacy or data ownership, or even, let's say, system resilience, right? I mean, to make sure that all of these things within a super app, including the wallet, including the financial transactions, are always online. There's never any bugs, errors, or anything like that. Kind of what's your perspective? Maybe Daniel, we'll start with you, and we'll go that way.
Yeah, I think right now, take the example like Grab in Southeast Asia market is very common, right? Within the Grab app, there's a Grab Pay, and in other market like using Line, there's also Line Pay as well, right? So this is a very good example to demonstrate that within the app, it will contains lots of different functions, like WeChat Pay as well. You can use WeChat for text messaging, not only on this, but also can pay it as a wallet. So what we can see that during the processing for the payment, authentication is very important. Such as if you're using iPhone, that may be connected to Apple Pay. And the security level that I think Apple is now doing quite good, that they would select, is it this kind of information will pass to the merchant, such as the cardholder information, address, or card number, etc. That is it involves some security and privacy information. And I think the Apple or the Google would have put a lot of effort to prevent this kind of privacy concern.
Yeah. Great. Paul?
I think just want to touch that. I mean, completely agree with Daniel, but I think it's the resilience. That's really what I think everyone starts to become aware about. Like the AWS went down a few days ago, and half the world stopped. We had the entire issue with the screens, with all our screens also stopped. So yeah. I think a hot topic is much more resilience than really thinking about everything in one app. And even to the point, I was in the US in the beginning of the year, and we have a brilliant scientist that works for us. And the next steps in payments is making payments with brainwaves, which becomes even more scary. So imagine you just walk and think you're going to pay, and you can pay. So that will become even worse than when we talk about privacy. Yeah. But that's like the next phase that people are looking at, which should be available in the next coming 3 years.
Wow.
But I think that's really where the resilience becomes a very hot topic. And how do you make sure that you're not reliant on only one company? Or if you're reliant on one single company, how to make sure that if something happens, server falls down or even other items, what the world's going to at the moment, how do you make sure that everything still continues to work? Which is the same, MasterCard, Visa, if they go down, all the merchants get impacted, or even just the bank doesn't work for a day. How is it going to, you can see the world stop.
Yeah, absolutely, absolutely. I think you make a great point. Anish, what do you think?
So I think it's again multi-layers. A super app could protect itself. A Grab, which is a Southeast Asian brand, could keep its data safe. But the Grab is installed on an iPhone or a Google phone, and they're scraping data. So the app could do what it can do, but the data could leak at many other touch points. These touch points never existed before. Now, take 10 years ago. When you make a MasterCard transaction or a Visa transaction, it stays within the MasterCard ecosystem because you're making it with a plastic card. But today, that transaction is being touched by the app that you used, the software that you installed on your phone, the hardware manufacturer who actually manufactured the phone, and the telco who you are running on. So there are so many new touch points which have been created, but there is no common law which protects these or ties all these touch points together. So privacy is a huge concern. And that goes beyond also to user education. There are features in Apple iPhones or Google phones these days to protect your privacy, but how many people know about them?
Right.
And how many people are enabling them or disabling them? So privacy is a huge concern. And I think with evolution of technology and the pace at which it has evolved, privacy or protection around privacy is not. It's a huge gap.
I wanted to ask a follow-up with respect to the data privacy issues and things like that. Are fintechs, when they're developing products, consciously thinking about this? Is there sort of people that are dedicated to, I wouldn't call it cyber, but someone who's going to say, okay, well, like you said, there's many touch points now, and is there someone there who's like, guys, we need to put guardrails around this data to make sure that because there might be another touch point, another new touch point that will be coming online later, right? You have more and more integrations, but we need to make sure that there's guardrails there that the data sort of doesn't leak out, and we don't have an issue where it's like, 3 million accounts were not hacked, but people's data is now publicly available, et cetera, et cetera.
So I think it also comes down to fintechs and the limited capital which they have in terms of designing around privacy, and that's where organizations such as JP Morgan should be stepping in and spending a lot more money as well. But see, this is a larger discussion. It's just not one fintech or one fintech trying to make a difference. It falls on the entire ecosystem that's being put together, and a lot of work needs to happen.
And I guess, Daniel, maybe I could pose a follow-up to you with respect to all of this. What about the authorities? What about the central banks and the regulations? Are they accounting for the data privacy and security in a region like Hong Kong, for example?
Yeah, so I think particularly in Hong Kong, there's a privacy law that to govern all these kind of privacy rights for the people. And another good point that you mentioned would be when a merchant selecting different payment company, they have to be aware about what kind of fraud tool that would be offered. It's quite important to reduce the fraudulent transaction.
Absolutely. Paul, did you want to comment?
I mean, just to comment first, we spent 2 billion on security, digital security. But yeah, I think there's a two thing. One, it's always the weakest link that happens. And unfortunately, the weakest link is mostly individuals who are not aware. So there's a lot of education that needs to happen. And a lot of people are very happy to give all their personal data to get a Facebook or Instagram or everything else, because that's how these companies make money. I think the awareness comes in. Secondly, the weakest link always comes true. So it's really protecting those weakest links. And we, for instance, have a full cybersecurity team. Most of the guys are former FBI or CIA, and but very much monitoring all our systems all the time. But it all comes back to, where does it come true, and how do you... Cybersecurity risk will always be there, criminal, governor-wise, or just pure, from a perspective, someone does something wrong. but it's really trying to prevent that it becomes a big blow up. So I think that's really the item. And also people being educated. I think that's really the point where, you know, and then there's a very good video on the internet where parents put their child pictures or everything else on the internet, and then, you know, all that data is there, and the kid grows up. And I think that's really the education that needs to happen more and more. Like, what are you really putting up for everyone on information that people can capture?
Uh-huh. I think you make a really good point, and I would say, me personally, like I've had situations where in my line of work, I'm always looking at scams or people coming to me and saying, "Can you evaluate this? Does this look like a scam?" When we talk about like phishing emails and all this kind of stuff, I've always thought I was super proficient in that. I will not open, I will not click on anything. But recently, I got a text message. I live in Cyprus. I got a text message from what looked like the Cyprus tax authority, and that I was due for a VAT refund. And it actually coincided with an actual real life transaction that was supposed to take place. So I'm like, oh, and it looks legitimate, right? So I clicked on the text message, started to go through the steps, and I'm like, this looks very, very real. Like, if you compare it one to one. But at some point during that chain of whatever it was telling me I needed to do, I'm like, wait, there's one thing that didn't make sense, and that's where I stopped. But I realized, whoa, I just got fooled. I thought I was proficient in this. I thought I work in an industry where, you know, we look at this kind of stuff every day, but even still, you know what I mean? Someone tried to basically, essentially get my banking information through this fraudulent SMS service. But anyway, I digress. We're pretty much out of time. I wanted to finish off with a rapid fire question. 5 years from now, do you think that Hong Kong will really be cashless, or will a hybrid model really still dominate here in this region?
Well, I think 5 years later, I think cash will be still in the market, but then for most of the merchants or the shops, they would accept different kinds of payment method. And only for those like very SME firm or very price sensitive shop, they may not accept the digital payment. But for others, I think for sure that they would accept the payment method for the digital payment method. Yeah.
Cool. Paul, what do you think?
I think, you know, at the end of the day, cash will still always be there. It just becomes lesser and lesser and lesser. Until the point that, as you know, Daniel rightly mentioned, it's individuals who still want to use cash for certain reasons. Traceability or other items come into play. But I think that's really where it comes in, that we'll have like 95% digital, 5% cash. And that, you know, our grandchildren most likely will look at us and say, what the hell is this kind of note?
What is that piece of paper?
Yes, exactly. So that's the least I see. I think the future is going to happen.
Great. Anish?
So if you look at the last 5 years, it's very hard to predict what's going to happen in the next 5 years. It's anybody's guess.
Yeah.
But I think cash will still be the anchor. It will continue to be the anchor. Hong Kong will continue to lead the way in the region. It has led the way all along, and it will continue to lead the way in the future as well. But we'll see many new forms of payment. We'll see many new form factors which will evolve with time.
Great. Awesome. We are definitely out of time, but I wanted to throw it out to the audience. Maybe someone has a question that they'd like to ask before we wrap up or finish up. I think we've delved into a lot of topics today. I think the audience is well satisfied. We hope. Thanks very much for joining us, Daniel, Paul, Anish. Thanks for sitting down with me, having a chat. Wish you all the best of luck in your separate endeavors and collective endeavors. Thanks for joining us. Enjoy the rest of the conference.
Thanks to you as well, Nicola.
Thank you.
Thank you.
Thank you, guys.